All right, I'm going to turn on the recording. And I've got 506. Can you turn on your camera?
Sure, give me a second, please.
Okay.
That's right.
Okay. Well, it's already 5:07, and it appears that you and Yago are the only ones here. And as a result, and because you guys are the only ones, I'm giving each of you 5 points each as extra credit.
Thank
All
you,
right?
teacher.
So that helps. Extra credit always helps when it comes to scores. Right now, let's see, 5 points. Okay, now listen, I'm going to share with you the my agenda. Armando, can you see the agenda? And you need to turn your mic on. Just keep your mic on
I'm
because
sorry.
you and Yago are the only ones on there. I don't mind if there's, okay, can you see the agenda?
Very clear.
Okay, I want to comment on the fact that everybody's done a super job with regards to the week 1 out of the attendance. Everybody was basically there except for one student. And for the discussion, everyone got full credit. So please keep it up. Now, this is in week 2. I'm going to start being stringent about in-text citations. First week was basically just to introduce each other, and everyone did that very well. Now, this is week 2. The requirements for the discussion and participation is a little bit more stringent. There are 2 discussion questions, but I want to caution everyone that, let me see, that although it just, the discussion has 2 questions, it is really 3 questions, okay? The first one, what might a very high current ratio actually indicate? There's a problem with a firm's inventory or accounts receivable management, question mark. That's one question. But part of that is also, the second part of that question is, what might be another reason for a high current ratio? Okay, so question number 1 is really 2 parts. Question number 3, why is it important to calculate the times interest earned ratio, even for firms that have a low debt ratio? So please, when you respond to the discussion questions, make sure you address 3 questions. Armando, you copy over?
Yes. Yes,
Okay.
teacher.
I know that in the past, students have seen that and they address 2 issues thinking that there's 2 discussion topics. And as a result, they lose a full 1/3 of the point value, which is 20 points divided by 3 is 6 points. So they start off with 14 or 12 to 14. And that's not what, that's one of the reasons why we have these meetings, so that everybody can get the word. And if they're not here, unfortunately, it's too bad. All right, now, the other thing is that the way week 2 will run, when you respond to this discussion questions, there are 3 parts, and I will, each one will be worth about 4 to 5 points each, totaling up to 14. But you must respond to your classmates, again, making substantive statements. In other words, it must have in-text citations. Each one is worth 3 points. So 3 points for one response to a classmate's, another 3 points for another response to a classmate. Waleed, I see that you've entered. Are you there? Over.
Yes, Doctor.
Okay, because you came, I'm awarding you 4 points. That's great. So
Thank
4
you so much.
points of extra credit. So good on you.
Thank you.
All right. We were just going over the agenda. Can you see the agenda?
Yes, I do.
All right. Week 1, everybody did a good job. Week 2 is going to be a little bit more stringent because each of your comments must have in-text citation. In other words, your response must be substantive. What that means is that you have to do research. You have to look at the textbook, journals, and whatever source that you can get. If you make a response that is substantively made from facts that you obtain from preferably the textbook, but journals, peer-reviewed journals, articles, even the website, so long as you use the another source for your response. Now, in-text citations are required, plus a reference. References in a book, in the indicated at the bottom of the references of your response. In-text citation is written within the body of your response. So as I indicated earlier, attendance is if you respond and do what is required for this week, you get 5 points for attendance. But for the discussion, it is worth 20 points. The discussion, your main post, is worth 14 points. And then the response to your classmates is worth 3 points each. You copy? Over, Waleed?
Yes.
Okay, and then the next thing I want to kind of emphasize up front is that there's a quiz this week. That quiz will be open on either Thursday. No. It will either be open on Friday or Saturday because of the nature of the feedback I had gotten from some of you that you desire the quiz to be later in the evening. More likely, I will make the quiz available for a 24-hour period. 24-hour period, because there's some that would prefer to take the quiz in the morning. Some people cannot take it until the evening, but by having it provided to everyone for a 24-hour period, I think I meet the requirements and the desire of everyone in the class. Iago, can you hear me? How do you copy? Over. Okay, Armando, did you copy? Over.
Clear. Thank you, teacher.
Okay. All right. Now, again, I am very pleased because out of the 8 students, there was 6 of you wrote your, it looks like you guys looked at the APA format video, which is good. Please make sure you look at the in-text citation video clip from YouTube. that's going to be extremely useful because depending on what type of in-text citation you use, the format is different.
Teacher, I have a question.
Go ahead.
This document in Word, agenda Thursday 18. Do you upload in the Moodle? Because I never see that before.
Yes, I do. As a matter of fact, I'm going to drag Moodle over. You see Moodle?
Yes.
Okay, let's take a look at the week 1. Because what happened in week one, see this Zoom in communication forum,
Right.
Supplemental resources. Okay. Here's the APA format, in-text citation, and also a copy of the video, a copy of the agenda.
Excellent. Perfect. Thank you.
Okay. So now I told everybody that when you open up your Moodle, the first place you should look at is communication forum. Okay. And then see this Zoom meeting. That's the link to open up the Zoom. But yeah, communications forum is basically what you should open. All right, now, so I do try to put all of these into additional resource. Now, I'm glad you said this because this agenda is going to be extremely valuable for you to have a copy of, because the focus for this week, if you take a look at the syllabus, here's the syllabus. All right. Yago, can you see the syllabus in your can you see it?
Yes, teacher, we can see it.
All right. So I think Yago left, so I'll take off his points. All right. All right. All right. See that now, if you take a look at the syllabus, week 2 is chapters 3 and 4. Okay. So I'm focusing on chapters 3 and 4 today. And all right. So I'm going to go right into chapters 3. Chapters 3 is understanding the financial statements and cash flows. First is the income statement. Okay. Now I'm going to increase the size of this so that everybody can see this. View, zoom, I'll make it 150%. All right. Here's the typical income statement. Okay. Notice that income statement has the very first part of it is the what we call the revenue. Okay, it's hard to read, but a typical student would get a copy of this income statement, and notice that the revenue is made up of sales, and it's very hard to read, but it's a copy. Sales return, discounts, and allowances. Okay. This is the income statement, and it is for a very specific period. And one of the things about income statement is that sales minus expenses must equal profits. You can get that information from an income statement. Okay, here's your income statement. Here's your revenue. Here's the cost of goods sold. Here's the operating expenses. Okay, and here's the profits. Now, if you take a look at the revenue equals net sales plus operating profits. So okay, revenue, total revenue is net sales, okay, which is 74,000. all right, plus operating profits. Operating profits is looks like 3,000. 3,000. Here's your operating profit. Okay, so if I look at that, that's 3,000. So that's 77,000 for revenue. Now, expenses is cost of goods sold, 19,000. Plus operating expenses, which is, it looks like it's 30,750. Plus losses, okay? Losses, tax expenses, 4,000. So let's see. So I don't know if they were in 750, add them up. 9 plus 4 is 10, 13, 3, 4, 5. 53,070. Now, so that's expenses. So when you take your sales revenue minus your expenses, okay, so I get my calculator. $77,000 minus 53,750. I have 23,250. That's exactly what you have as your net profits. So you have to be able to do this. Now, what's going to happen on a test, I'll give you a blank. I'll give you a blank income statement with these things, with these items blank. And then I'll have a list of all these elements, and you have to put them in the right location, in a right area. That way you can basically know or learn where certain things up. If I, for example, rent, where would that rent be? That's operating expense. How about labor? Oh, that's cost of goods sold. How about office supplies? Oh, that's operating expense. How about interest income? Oh, that's operating profits. How about taxes? Profit. So you would, all of these lists, you have to populate this income statement. Okay. Now, there are different examples for income statement. Okay. This one here is is an example. Okay. One good thing about this income statement is that it gives different years, but the important thing is that it's for a specific period. Okay. Most of the time, income statement, you'd be just looking at just 1 year. This is extra, year 2 and 3. The reason why they include year 2 and 3 is to see trends of how revenue has moved, cost of goods sold, operating expenses, and operating profits. How, and that's one of the valuable things about looking at a company's health. Now let's look at a balance sheet. Okay. Well, Armando, do you understand what you will require to know for an income statement?
Yes, I have a question.
Go ahead.
Yeah, it's general really. Because in the last classroom that I have with you in, I think it's calculus,
Yeah.
statistical, I have a little bit problems with, because I love to use open source software. I use Google Sheets or any kind of open source software. My question is, the requirements for use Excel, Microsoft Excel, in this type of the information is must, because if that is very important, because the formula we use here maybe are particularly very specific. I
Yes.
don't know if I will need the buy the license for Excel, because now it's just Zoom and rest. I know it's easy right now, but in that time they will be very tough, and maybe we will use the more sophisticated formulas. Um, do you think one of the requirements will be GODA Excel, or is enough if I have Google Sheets, alternatives like a Google Sheets, like a open source Excel, something like that?
Well, when I ask the question on an exam or on a thing, it says, okay, here's 10 items: advertising, mileage, sales return, taxes, interest, depreciation, capital goods, capital assets, interest, uh, repairs and maintenance, delivery costs. Okay, all of these items. And then with these items, classify them in a typical income statement. And so you don't really need an income statement in an Excel. You can say, okay, here's an income statement. You write down income statement, and right underneath with an indentation, revenue. And then you list all the items that are revenue. Next one, cost of goods sold. And then you indent the elements that belong in the cost of goods sold. Operating expense, and then you list all the things that belong in the operating expense. And operating profits, and then you list all the things that belong in the operating profits. And then profits, whether it's losses or gains, you put that there. Then you add them all up. And so when you add up your revenue with your profits for operating profits, and then you add up your cost of goods sold, operating expenses, and so on, then when you add or subtract, if you add all your net sales and operating profits, it should come up with the right revenue amount. If you add up your cost of goods sold plus operating expense plus losses, it ought to add up to all of the total of the expenses. And of course, sales revenue minus expenses equals net profits. Now, do you need a Excel for that? No. But what's important is that you know where the elements belong. Okay. Now, the problem with what you just said is that certain third-party or other tools, it might not be clear where you put them. Although I will tell you that when you make entries into those documents, generally you can you must put the item in the proper category. Otherwise, you're going to have an income statement that doesn't add up. You see? So the original question, do you need an Excel spreadsheet? No, you don't. But it makes it easy.
Great. Thank you, teacher.
All right, now let's talk about the balance sheet. Now, the difference between the balance sheet and the income statement, balance sheet is of a particular date. And in here is assets must equal liability plus equity. And so here's an example of an accounting form where assets is on the left side, the right side is liabilities and stockholders' equity. But balance sheet can also be in a report form where you have all in one column, assets, liabilities, and stockholders' equity. Now, I use this report form to indicate that when you add up your assets, assets include current assets plus investments plus net property, plant and equipment plus intangible assets plus all your other assets. And that comes out in this particular sheet, 770,000. Okay. Now, when you add up liabilities, liabilities made up of current liabilities plus long-term liabilities. If you add them up, that comes to 481,000. Then you take a look at the stockholders' equity, and that consists of common stock plus retaining earnings plus accumulated other income minus treasury stock. That came out to 289,000. Now, when you take all this information, take your total asset, okay, that's equal to total liabilities plus equity. And that comes out to 770,000, which is your, should total up to the total assets of your balance sheet. I will tell you that, and here again in the balance sheet, whether you put it in a accounting form or in a report form, I'm still going to give you a list of items like cash and cash equivalents, short-term investments, inventory, supplies, land, cost of land, buildings, equipment, goodwill, short-term payments, payables, accounts payable, notes payable. Okay, and what you'll have to do is put those elements in the proper location. Is it an asset? Is it liability? Or is it stockholders' equity? Those are the three categories. And so, so the thing about it is, it's a balance sheet. Therefore, you know, when you look at total assets, when you add up liabilities plus stockholders' equity, it must equal your total assets. Here's another form, okay, which is they did this in a column format, but it's also just like the income statement, had side by side 2020 and 2019. And so here again, the reason why you can do that is to see, the reason why you would want to do that is to see trends. Okay. Waleed, do you copy? Over.
Yes, teacher.
Okay. Now, chapter, so that's all chapter 3, understanding financial statement. The focus is understanding the income statement and also the balance sheet. And that, in this agenda gives you that in one area, but the book has this as well. So the other thing that chapter 3 talks about is cash flow. Cash flow is the money that flows in and out of the firm from operations, financing, and investing activities. It's money that the firm has available to meet current and near-term obligations. Cash flows is what allows the firm to pay their expense on time, which means supplies, employees, the rent, insurance, and other operational costs. That's cash flow. So here in the book, it says how to calculate cash flows. It has 6 steps. Okay. Now, so that's 3 important elements that you need to really fully understand. The balance sheet, the income statement, and cash flow. Now, chapter 4, evaluating a firm's financial performance, is just as important because it constitutes what is considered financial analysis. There are about 5 questions that chapter 4 addresses. First, and this is all evaluating a firm, an organization. Question number 1, how liquid is the firm? Can it pay its bills? These questions might be where you might be interested in buying a company, buying a firm. And before you buy a firm, before you obligate your assets to acquire that organization, you should know the health of that organization, that firm. First, how liquid is the firm? Can it pay its bill? Why liquidity? Why is liquidity important? Because if a firm has all of his or her assets, its assets tied up in capital goods, in other words, they don't have their liquidity is virtually zero. When the bank calls for a note to be paid, can that company pay it? And if they can't, they got to declare bankruptcy. And so that doesn't indicate how healthy a company is. Okay, so what is liquidity? Ability to pay bills on time. Some of the elements you would look at is current ratio, compares the firm's current assets to current liabilities. In other words, the current ratio is firm's current assets, CA, over in the denominator current liabilities. How about the asset test? Okay, it compares cash and current assets minus inventory that can be converted into cash during the year. If a company's got money tied up into capital goods, and the bank comes around and says, we want our money, but the firm looks at their cash flow and says, oh my goodness, we don't have any cash. What assets do they have that they can rapidly get rid of, sell, turn into liquid assets so that they have the amount of money in order to pay their liabilities? So asset test is amount of cash that they have on hand plus accounts receivable divided by the current liabilities. Okay, that's a ratio for asset tests. Days in receivable. Days in receivable. A company might be soft-spoken. They're very soft. Like, for example, Waleed, you owe me $20. Armando, you owe me $30. But Armando, you say, you know what? I don't have it today. Can I pay it tomorrow? Tomorrow comes. Oh, I don't have it today. Can you pay it next week? Waleed comes to, oh, I can't, I don't have it today. That is an indication of a company that is soft in collecting their receivables, as opposed to a company that says, well, Armando, you owe me $30. Pay up. I want my money today. Waleed, you want I loan you $20. I want my money today, not tomorrow, today. That's a company that has control of their receivables. But you know, there are a lot of companies out there that are very soft in collecting their receivables. When I say soft, I mean they are very empathetic on the consumer or another company's ability to pay their bills. I mean, for God's sake, if they can't pay their bill, why be hard on them? They can't pay it. If they can't pay it, they can't pay it. So there's companies like that. And if you are soft, that is one of the elements that will judge. If you want to buy a company, do you want a company that has so much receivables and they're not been collecting them? And chances are they're not going to be able to collect that. So it's something to consider. Okay. Now, what's days in receivable? It's the accounts receivable divided by the daily credit sales. Okay. And they extend that to a daily, which means accounts receivable divided by the accounts receivable over a given 365 days. So they can convert it to days. Okay. Accounts receivable turnover. How many times are the accounts receivable rolled over each year? That's annual credit sales divided by accounts receivable. Days in inventory. You're going to buy a grocery store. You look at the shelves and you look at the bread and you notice that some of the bread has got mold. And you have to ask yourself, how long has this bread been on the shelf? Oh, it's been over almost 30 days. Why? Can't you sell it? That's the question you need to ask if to get the health of an organization. Okay, how long has inventory been held before being sold? That's the inventory divided by annual cost of goods sold. Again, they convert it to on a daily basis. That's why they divide by 365. Inventory turnover. How many times are the firm's inventory sold and replaced during the year? That's cost of goods sold divided by inventory. Now, question number 2. How are the firm's managers generating adequate operating profits from the company's assets? And so the formulas that you would look at in assessing the health of the firm: operating return on assets. In other words, operating profits divided by total assets. And operating profits were sales. Operating profit margin, that's operating profits divided by sales. Total asset turnovers, that's equal to sales divided by total assets. Fixed asset turnover, sales divided by net fixed assets. All of these fall under the firm's manager's ability to generate adequate operating profits from the company's sales. The third question is, how is the firm's financing its assets? There's a debt ratio, total debt divided by total assets. A person with a high debt over and not very small amount of total assets, their debt ratio is very high. So high debt ratio might not be good. Okay. Times interest earned, operating profits divided by interest earned. Question number 4, are the firm's managers providing a good return on capital provided by the company's shareholders? And formula for that is return on equity, net income divided by total common equity. The last question, question number 5, are the firm's managers creating shareholder value? And the elements there is market value ratios. In other words, price per earning per share, price divided by earning ratio. Another way of looking at that is market price per share divided by earnings per share per ratio. The other one is economic value added, EVA, price by book ratio equals market price per share divided by equity book value per share. So all of these are elements consistent of chapter 4, evaluating a firm's financial performance. So chapters 3 and 4, extremely valuable. Chapter 3, again, for income statement. Chapter 3, understanding the financial statements and cash flows. Chapter 4 is evaluating firm's financial performance. So the basis of assessing a company's general health before you purchase it. So the question I might ask, I'll say, given a certain liquidity, current ratio, operating return on assets, debt ratio, market ratio. So given certain values for these type of ratios, the question is, assess the company's general financial performance, okay, based on the indicators I provide. Here you have 5 questions, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, about 15, 16 indicators. I might give you 5 indicators. And of the 5, give your assessment of the firm's performance. Okay. Waleed, you copy over?
Yes.
Okay.
Yes, sir.
Again, I can't overemphasize that chapters 3 and 4 is extremely important. And it's unfortunate that there's only 2 of you that are hearing this. All right, a preview of chapters 5 and 6. Now, 5 and 6, we're going to look at the time value of money, okay, present value and future values, okay? And so the formula. Present value is the future value of the investment at the end of n years. That's FV. N is the number of years until payment is received. R is the interest rate. Present value of the future, that's PV. Now, if you want to assess the future value, that's future investment at the end of n number of years. R is the annual interest rate. N is the number of years. And PV is the present value. More often than not, I think most people have gotten exposed to the time value of money. So I don't anticipate 5 and 6 going to be very difficult, but that's for week 3. Okay. What students have had difficulty with is chapters 3 and 4, because you have to do some critical thinking once if you have only 5, 6, 7, half a dozen indicators. Based on that information, sometimes the other indicators are not available, and so you do have to make assessment based on the information you have available. All right, and chapters 5 and 6 is just future value and present value. And so given a special interest rate, given 5, 10, 15 years, present value, what's the future value? And question is, if if we want to earn $10,000 in future value, given a rate of 5%, how much do we need to invest? That sort of questions for present value and future value. All right, so that's basically it for the quiz that's going to be given this week. I'm going to probably make it available Saturday from 11 a.m. in the morning to 11 p.m. at night. Okay, so if you're one of those individuals that want to try to do this quiz during the day, you will have available to do. So most of the people, though, they work and they need some time in the evening. That's why I did it that way. Waleed, you copy over?
Yes, sir.
All right. Discussion again. This is I'm going to insist that we follow the guidance that Southern State University has put out, and that's the main post be done by Wednesday, tomorrow. The questions actually was due. I put that available this weekend, Saturday, I believe it is. So there was already 2 students that have done theirs Saturday, Sunday, but you have Monday, Tuesday, Wednesday till 23:59. And then your post to your other students. Urge everyone to read chapters 1 through 4, especially because chapters 1 and 4 is the quiz for number 1. All right, now, Armando, do you have any specific questions, comments, concerns? Especially this particular class was not very stressed out in week 1, because week 1 was just basically getting to know each other. I'm very happy that I'm going to be able to drag the spreadsheet here. Week 2, attendance, 14 points for discussion, 3 points for responding to your classmates, 3 points each. So this total here is 20 points, and the quiz is 15 points. Okay. So Armando, you have any questions, comments?
Oh yeah. In the past, I have experience for this kind of thing that you explain when you give the customers 90 days or 30 days to pay something, or when we because I have a small company in Peru, and we experiment with that. My question is, in the discussion board, I can put some of this experience that I have because I see in real time what happened when we give a credit to the company for pay the bills for our services, and really it's damage the finances. It's a lot of problem because we are a small company. I know the effects, but when you are a large company, the effects is different. Because you say you need a text citation and something, everything about the book. I don't know if I can share my experiences, or you need to specify just information for the book and focus in that.
Armando, I don't want to take away anything from your experience, okay? Obviously, some people have got vast experience in all this, but you got to remember that the course that I teach is all about teaching students the proper format, the proper way of doing research, the proper way of writing a paper, the proper way of writing a in-text citation. Some people do not, they know a lot about how to evaluate a company, but when they ask, okay, let's do some research, they don't know how to write in-text citation. They don't know how to write a APA type format. So, you know, how difficult is it to look in the textbook for the book and find high current ratio? That's in chapter 3. So if I were you, I say, okay, here, and then you sit at the computer and type out what might a very high current ratio actually indicate that there's a problem with a firm's inventory or account receivable management. You type that out based on your experience. And then at the end, you write down in-text citation based on the book and the book's in-text citation. You say, hey, you know what? Q, A.J. Martin, comma, 2020. And you're
Got it.
done. That tells me that, okay, you know the material, and yes, you referred to the textbook, but some people don't know the material, so they have to use the textbook. And so it might be that you might know the material, but then when I see that you write the in-text citation and you just put the author, that would be wrong. Because if you look at the in-text citation video, there's 3 or 4 different ways to write in-text citations. One, the author, comma, year. Second one, author, comma, year, comma, page number. And, you know, so maybe there's about 3 or 4 authors, but they only write down one. Oh, that's, you know, you have to look at the format. So
Got it.
So it's and I fully understand that some people have a great deal of expertise in this. Same thing with me. I was a comptroller at in a $40 million firm, so I know this stuff. But I'm trying to teach students how the proper way of doing research.
Perfect. Thank you, teacher.
Okay, Waleed, do you have any questions, comments?
No, teacher. I'm good.
Okay, again, I want to emphasize that everybody so far is doing so well in this course. I just hope that that you all keep it up. I'll try one more time. Iago, are you still there or are you gone? I see his name, so apparently he is logged on, but he explained to me that he's working.
He write in the chat, teacher. He write in the chat, yes, I am here. He wrote in the chat of this Zoom.
Well, let me stop sharing. Okay, you say you have a flight at 12 p.m. Okay, so but the quiz is Saturday morning, 11 a.m. Okay, but the quiz is Saturday, 11 a.m. to 1 p.m. So take it early.
Mhm.
Because it's a 4-hour quiz, and you know, I'm really bending way over backwards because it is, again, a 4-hour period, and as we get more and more in depth into this, and also depending on how it goes, more than likely I will shorten that time period, because I have to find some way to get it down to 4 hours. But I'm trying to have it available to as many students as possible. Right now, I've got one student that for some reason may not have, unbeknownst to that student, might have been registered incorrectly because I haven't heard from the student. Okay, okay. I'm going to ask, yeah, I'll go.
Teacher, just for finish, I share in the chat, in the same chat, I share the YouTube channel that I found where all these courses it's developing.
Yeah.
Not the same book, similar book, but it's the same courses, same instructor, same titles, very close to that. I share for my friends, maybe they will use that for his study daily basis.
Yeah, I would rather, though, that you know, you do go ahead and share, but please keep in mind that I want them to answer the questions in the proper way. Oftentimes last quarter, Armando, you had answered the questions using a method that was totally unnecessary. Okay, you made it even much more difficult for a number of students. I tried to teach them hypothesis testing, where it only takes about 5-10 minutes, but your way, it took them 3 or 4 hours because you went into a lot more detail than we had intended. I had intended. So please be aware that sometimes it may or may not be, I don't want you to cause issues with other students, but you're welcome to go ahead and do it. Okay. All right. Well, all right. So I don't have anything else. It's 6 o'clock. My intention is to stay connected for another hour, just in case some other students show up. And but I've already gone through this, so essentially I'll send them all an email that says, hey, you know what? You can look at the resources I will include in the Moodle, in the communication forum, but hopefully it will help them. All right, Waleed, Armando, Iago, I don't have any other questions. Otherwise, that'll be the end. Okay.
Yes, thank you, teacher. Thank you, everyone.
Thank you.
Okay.
Bye, teacher. Take care. Bye,
Bye-bye.
everyone.
Good evening.
Bye-bye.